So I think a downturn in the stock market will not hurt gold and silver. It will help them. I think there's a point at which the gold and silver move will advance so aggressively that it will take breath away.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 4th through November 11th, 2024, while supplies last. This week we feature the 2024 1-ounce gold UK Lion and Eagle coin, a highly limited release, available at just $99 over spot. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Michael Oliver from Momentum Structural Analysis. Michael, thank you so much for joining us today.
Good to be back, Elijah.
Well, it's great to have you, especially after the election. Everyone's heard by now that Trump won very decisively. It looks like he's going to be winning all the swing states, as in addition to he won the Senate and almost certainly the House as well. Your perspective on what we've seen and how the market's reacted.
Well, it's obviously a Trump party in the stock market, and that's it bleeding obvious. Just look at the screen. The technical situation, we've not signaled the major breakage yet. We still think downside breakage is likely to occur, highly likely to occur. This rally looks like it could be exhaustive, newsy, and that's not the kind of thing you want in an old bull trend that's already showing signs of exhaustion, that's already by various metrics, including fundamental type, that these new highs aren't confirming. There's too many things that are wrong. And the hour metrics, that's what we see. So we do not trust the rally. Now, we're measuring, especially the NASDAQ 100, because it's been the leadership index for the last 15 years. It's gained more than twice as much as the S&P. And it's, front-end loaded with the name stocks, NVIDIA, Amazon, Apple, et cetera, et cetera. As it goes, the market will go to varying extents, but it's been up more than others. When it goes down, it'll go down more than others. When we measure it, we measure on a shorter term level, like weekly momentum. How is price doing versus its 3-week average? We create an oscillator, and it often looks different from price. We run it versus its 3-month average, 3-quarter average, et cetera. And we're looking at different time scales of its trend. I've never seen before, I'm serious when I say this, going back decades, I've never seen before the configuration of breakage levels on momentum that are so tightly clustered together. Normally in any inhale-exhale market, as you're moving up or down, you can break something short-term and create some kind of counter-trend move, and it doesn't alter the big trend. But right now, we have a situation where, we've already damaged weekly, but the monthly momentum literally just below the lows we saw last week will blow major support structure. And about 1% or 2% below there, I'm going to blow major quarterly momentum structure. So when we look at it from our vantage point, not just the simple price chart, which everybody looks at, we don't see glory on the upside. We see lower and lower highs. In other words, the NASDAQ made a high back in July in price. Okay, it took it all these months up until yesterday to finally take out that high. So with 5 more months of labor just to get back and nip it out. Momentum isn't making a new high at all. It's a much lower high. And this is going on with many sectors, many indices. So I think we're making a top. I do not trust this rally. I think it looks exhaustive. And therefore, I would be highly spooked if I were a bull. If we drop back, and I'll just say this, you don't want to see the NASDAQ 100 back down around 2,000 again. It got up to 2180 today. Okay. The July high was, I think, 20,675. So we took it out by like 0.5%. You don't want to go back down and visit the price lows we just saw a week ago. If you do, I think it's over. So that's our opinion of the stock market. And obviously, we've always argued that, especially in this environment, with the asset class movements and money flow from one to another, that when this market breaks, biggest bubble in U.S. history, it's going to ripple into it's going to have wave effects in other markets, and it's especially going to upset the central banks. I don't just mean the Fed, but Europe, Japan, so forth. They're all tied together, okay? And they're all don't want their markets to break down. We're the one in particular that should be watched because we're the biggest bubble. When that happens, I think you'll see a brief flush of money out of the stock market into the T-bond market, which, since the Fed rate cut back in September has gone the opposite direction of the stock market. Whereas yields have risen, bonds have dropped in price, stock market's gone up. Now the stock market, I think, is trying to peter out, and the bond market is trying to carve out a low. And if you see it start to move up like about a point above where you're trading right now on the T-bond futures, it's saying, well, I'm coming up out of the hole. Well, why would that occur? Possibly because money is starting to move out, doubting money, early money is starting to move out of the stock market into what is perceived to be a possibly safer place. And I think the monetary metals will be a large beneficiary of a downturn, a major downturn in the U.S. stock market.
I was a bit surprised, right after election night, or when we knew the outcome there, that precious metals took a beating. Your perspective on that? I mean, it doesn't seem like, the first Trump administration, there was a whole lot of fiscal spending, a whole lot of increase in the debt. So I don't exactly understand that.
Trump is an expression, I think, of not only emotion against what's been going on, but intellectual policy shift. But let's put it this way, he's not an intellectual, but he's sort of got an idea of what's wrong, okay? But he's got many ideas that possibly don't fit with the real free market perspective. And as you said, in his administration, the debt rose and so forth, and he wanted the Fed to cut rates to zero, et cetera, et cetera. There are many people, though, in his administration that are emerging, we know, that got their heads screwed on pretty good. So there's going to be a lot of good policy. Let's give it that. But it's going to be mixed. I mean, tariffs is, I'm glad they're going to cut my income tax. And frankly, if you break the stock market, don't count on having to pay taxes next year. Because if the IRS can't collect taxes because of dysfunctionality, too many people can't file, don't file, have to file for delay because they're hurting, too bad. You take 20% off their IRAs and so forth, the pain's going to hit them from the other side. It was hitting them on the consumer side. Now, all of a sudden, their sense of safety diminishes. It wouldn't shock me that he has to revert to sales tax or definitely the tariffs. But again, even if you think he's a hero and his policies are headed in the right direction, you've got to realize that there's been decade after decade. I don't just mean 4 years of Biden, okay? Biden didn't do anything to cause inflation, really. Government spending, but they all do that decade after decade. The president does. Congress does. It's the Fed that really did that. They're the ones that pumped money into the system, gave us free money for 10 of the last 15 years. Fed funds rate effectively at zero. So, but that's been that process of rising institutional control over our lives, economic controls, regulatory controls. Even if you move to dismantle that and to lessen taxes, for example, which is, let's say, a good direction, okay, you've still got a monster that's going to break because you've got errors that have been compounded over not just the past 15 years of stock market bubble, but decades of built-in systematic errors and pain that's been hidden that will be unleashed when the errors are exposed. So it's not like you can go in and simply stop that. That's probably going to have to pay dues, all those compounded errors of decades, and especially the last 15 years where money was free. That creates massive mistakes on the parts of individuals, families, corporations, etc. And when those dues have to be paid and we expose it, I think the stock market is like the big needle. When you punch a hole in it, all these other errors will be exposed. All the data points you want to look at that look, okay, they'll suddenly won't look okay. They'll go dark quickly. That's been the history of data points anyway. So even if he's on a correct path and people behind him in Congress and so forth and in his administration might be moving in a correct direction, they got a monster that's going to collapse on them. And unfortunately for them, they'll probably be blamed for it. If the stock market gets down real hard during his administration, they'll say, well, Trump did it. No, it's the history, the buildup of these errors that finally has to unleash. And so the assumption by Trumpers who may have bought the market, the last few days aggressively, while it's a lovely thought and maybe we're headed in the right trajectory, there's too many big bad things that are likely to have to come first, not joy. And therefore, they've made a mistake. And we shall see. But our technicals argue, do not trust this. If it sneezes, it's going to cough and it's going to go down hard.
And when it comes to precious metals, are there any key technical levels that have been broken? Or when you're looking at momentum, is there anything to be concerned about at the moment?
We've had, after the 3 years of lethargic action by gold, where it was caught in a 20% range, that's all, 20%, max high to max low. In fact, most of it was a 15% range between mid-2020 and early 2024. Silver and the miners staircase down gradually while gold went sideways. But once we emerged in March, the tone of the market changed, and of course, gold shot up nicely. Silver went from our breakout level was between 25 and 26 on momentum, and we shot up to 35. But in that process, you'll notice they continue to have these repeated sell-offs. Sometimes they last several months, April to May, June, July. In gold, for example, where it went sideways, silver corrected down, or several weeks, or recently just a very bad week. Now, there's a point at which this bull market will prove to the doubters, who apparently are constant out there. In fact, I've never seen such doubt as we've just had with the recent drop. I think everybody who's been a doubter has jumped on board. That was it. It's all over. One of the assumptions there is that the stock market goes down, gold and silver go down. Well, the stock market just went up big, gold, silver went down. Okay, fit that into your logic, okay, if you believe that. So, our argument is if the stock market goes down, it will further fuel the central banks into what they do best, which it will quickly refuel gold. Not that it needs refueling because it's ahead of events. It knows what's coming. So I think a downturn in the stock market will not hurt gold and silver. It will help them. Just the opposite of what's happened in the last 72 hours. So the recent drop did not break anything on even intermediate momentum, long-term momentum. Nothing was broken or even jeopardized. Whereas everybody screamed, that's it. I don't know what they're going to say when we go back to 2,800 gold and silver goes back up to the mid-30s again, 35 or so. When are they going to shut up? Hey, I think there's a point at which the gold and silver move will advance so aggressively that it will take breath away. Meaning, if you go back to 35 and gold goes back to 2,800, and people say, well, golly gee, we were wrong again. It's not the top. There'll be a point at which you won't just go up another couple $100 in gold or another $2, $3 in silver and then have another of these processes. You'll launch in some way that just takes breath away. Anyway, that's our view.
Now, on the election, again, one of the things that surprised me and relieved me was that there doesn't seem to be social unrest, not really anything right now. And a lot of, the other side seems to be peacefully accepting the results. Obviously, they're complaining about it, but...
Well, maybe I've been wrong on that. The University of Virginia Department of Politics suggested in a poll a year ago that there's good odds that you're going to have upset, of the kind you're talking about. And, well, he's not in office yet. I mean, if they go to the streets of Washington and have a riot, well, the Democrats are in power there right now, okay? It doesn't shift for, a couple more months. So it would be kind of inappropriate to do it right now because Trump's down in Florida, So I don't know whether that's going to happen or not. But clearly I do suspect that from a political party perspective, that the upheaval in the Democratic Party will be quite major, where the radical left of that party is really PO'd. And they've already expressed that. Bernie Sanders has said, we've abandoned the working class, therefore we lost this. We need to become a workers. Okay. And Ocasio-Cortez. And so the people like that will no doubt ascend into party ranks. Or the party will totally split between, the extreme left and what they view as the now out of power forever moderates and Democrat parties. So that's going to be an interesting process. But as far as the social unrest, I suspect that what helps generate that kind of thing is also pain, economic pain. And, a stock market downturn will inject that into society because it always does. It did in 2008 and 9, even if you weren't even in the stock market. You got laid off. And this is the biggest bubble in U.S. history. Bigger than 29, bigger than 2000, bigger than 2007. So there will be associated pain. And whether it's politically linked, we'll see.
Now, when it comes to triggers for the stock market, if you could expand on that, because obviously it seems like at the moment, social unrest regarding the election isn't seeming to be a trigger for a stock market fall, but it doesn't seem like fundamentally the election really had anything to do with this. Fundamentally, the stock market is just overvalued. So what do you think could be the catalyst for a downturn?
Well, I don't know that you need I think it'll be technical only. In other words, and then you find the explanations later. Usually that's the way it is. It's usually rarely a dark cloud comes over and says, instead the market breaks sharply and people say, what happened? And then all of a sudden the data points start to change. The underlying data points that are already not really good anyway, but the Fed likes to say how good the economy is. So the stock market is the leader. Watch it right now, because when it goes, that will provide one further impetus for gold. And temporarily, and I say temporarily because I'm not a friend of long-term U.S. government debt. There's a lot of major analysts, including one from Bank of America a couple of weeks ago, said, do not buy U.S. Treasury bonds. Okay, this is a chorus from very wise people. Many analysts that I respected aren't technicians. But the technical situation in bonds looks like you could actually get a spike on the upside for a couple months maybe, where if money moves out of the stock market in a somewhat surprise process, not really, but to many people, money will flow into T-bonds for a while. The main beneficiary ongoing will be gold and silver. But right now, I think you've got to watch the stock market very closely. And as I said, as far as technical triggers, I won't get specific. We give that to our subscribers. But generally speaking, you don't want to go back down to where we were a week or two ago in price. That's only several percent below you. So if you do that, something's wrong. And it likely will be exposed fairly quickly. And I don't mean a crash, but I mean you could have a 10 or 15% jolt very quickly. And then a pause, and then another, et cetera, over a span of several quarters, you could drop 20, 30%. I'm not looking for a crash up front. It's always possible, but I suspect not. I suspect it's in double-digit jolts. And during that process, I think gold and silver will be perceived, and many analysts do now. They realize, it's beating the stock market. In fact, it's been beating the stock market for a couple of years. If you go back and look at the spread low of gold versus the S&P a couple of years ago, gold has appreciated quite rapidly from that low, and a significant percent. And year to date, gold's up like 30 some odd percent. Okay, and the S&P is up like 18 or 19. So. And silver, by the way, is up more than gold. At least it was a few weeks ago, year to date. So asset managers are noticing that. And so when that stock market wobbles, it's going to spook movement of money.
As we look into possibly the bond market doing well in the coming months, your perspective on the banking system, because I know that's been an issue for the banks over the last couple of years as we've seen interest rates high. So can you give us an update on that?
Well, they got a big goose the other day. Bank sector went up very large on the Trump rally. Again, the banks will go with the market, and whether they lead it on the downside, I suspect not. But all the sectors of the market will go down with the market. Watch NASDAQ 100. The S&P is closely, by the way, our trigger levels from NASDAQ that tell us, okay, we've really started. And I roughly defined it as don't go down to the lows we saw a couple weeks ago. A week and a half ago. S&P has numbers down there too. So S&P doesn't have to go a lot further to trigger its stuff. So when it goes, all the sectors will go too. And no doubt there will probably be, in the banking sector, a symbol here or there that will get a headline. And of course, all it takes is like one. I don't mean some tiny little bank, but some regional or medium-sized bank that has a headline and people say, oh my gosh. But the real bubble is in, of course, the tech arena. And I'm not saying that the tech arena is unjustified in the bullish outlook of how it's going to change our lives, no more than .com did. .com bubble broke and dropped 82%, NASDAQ 100, between 2000 and 2002. But all the notions we had of how it's going to positively change our lives were quite valid. In fact, over the subsequent decades, we've learned it was even more valid. It really did change our lives in a good way. And so I can't argue that AI is invalid. It's just that it's overpriced. So even if it's as valid as people say, it's still a bubble. And, you could have a major regurgitation. And as it goes, so will the broad market. And also there's some other indices overseas that very much resemble ours, not Europe. Europe is not a bubble. China is certainly not a bubble. They're not even double the price they were in 2009. But Nikkei in Japan, again, monetary policy helped create that one. And the Sensex in India both look like bubble-type markets that are very much in sync with us in terms of how much do they have to drop to blow their structures. I'm not talking price, but momentum structures. They're pretty much in sync. So this U.S. drop would not be isolated. Hence, the central banks of the world will go berserk.
It definitely will be interesting to see what happens from here. Any last thoughts you had, and where can our viewers find you online if they're interested in continuing to track this with you?
It's Oliver MSA from Momentum Structural Analysis. Go to our site, take your time, peruse through our methodology, some of our history. We've got a lot of archived reports there, especially regarding the S&P 500 over the last several decades. And realize that we're technicians, but we look at price only secondarily because often it's deceptive. Usually, almost always, I will say, when you have a trend change in a market, it will be signaled first by momentum, secondarily, and possibly even 10 or 20% off the high or low by price. So we focus on momentum, and we think we give our subscribers an early warning.
Michael Oliver, we really appreciate your time today. Once again, thank you so much, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for November 4th through November 11th, 2024, while supplies last. This week we feature the 2024 1-ounce gold UK Lion and Eagle coin, a highly limited release, available at just $99 over spot. We also have backdated silver 1-ounce Britannia at just $2.99 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.